Geodrill is a provider of drilling services for the mining industry in West Africa, Egypt, and South America. CEO Dave Harper is here to tell us about the company's Q3 financials, which showed a huge improvement from last year, with revenues growing 13% and EBITDA growing more than 12 times. What changed, and should we expect strong profitability and continued growth in the future? I'm Martin Gago with Market Radius Research. It's Friday, November the 22nd. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Dave, great to see you again. Solid, nice results you papered this quarter. Geodrill seems to have its mojo back. Why don't you tell us what's going on?
We did. We're back. Thank you. Yeah, well, I'd like to say it was an exceptional EBITDA result, but of course we were coming off a low base. As investors might recall, we took a provision on a couple of long outstandings in Q3 this time last year, and that we had to take a one-time paper loss, and we didn't have that that abnormal in this, so it was more a normal quarter for us, but still. 34 and change USD in revenue, gross margins of 24% and EBITDA margins 22%, I think are very respectable. Also considering that we've actually done a lot of good work in repositioning our customer base from let's say a larger split of junior and a smaller moving from a reasonable concentration of junior exploration companies to a more concentrated demographic of senior miners, obviously comes with a more competitive pricing landscape. And so I think, the margins that we produced, given that change, was still very solid, but also a necessary change, a very necessary change, because now we don't spend so much time chasing payment.
Yeah, and as well, I would think you're with the longer term contracts, there's less sort of G&A and driving the rigs around. It's more stable and predictable, and you can manage and plan that business better.
Yeah, exactly. It's an economy of scales. The more rigs that are spinning on the ones on the one location for the one customer, and the less time spent driving between projects obviously adds to your bottom line. Less headaches, and again, the biggest thing really is just less problematic in terms of getting paid. You're dealing with a customer base that is cash producing in an environment of very strong commodity prices. And so our customers are printing money at the moment. So we're just really focusing on working for senior miners, and where we do work for companies that are intermediate or junior exploration companies beholden to the capital markets, we have them on a pretty tight leash in terms of payment. In some cases, private companies, for example, we might even ask for payment in advance.
So while your focus is on the senior producers, you are still doing a relatively small amount of work with the Explorcos?
Yeah, the ratio has changed from about this time last year, where we might have been 70-30, 70 senior miner and 30% junior exploration or intermediate. We're now basically kind of around 90% senior miner and 10%. So it's quite a change in that ratio, and it's evidently it's working very well for us. As the Q3 that we've just produced was a solid Q3.
Yeah.
And look, there's more of Q4 is, we're all basically halfway through Q4, and I can tell you that Q4 is looking good. This is a contracts driven business. Earlier this year we announced $150 million in contracts for senior miners. Post quarter end to this quarter, we announced, which we announced in the PR that came out a week or so ago, that we'd announced an additional circa $49-50 million worth of contracts in South America, which is where we're really focusing our growth efforts at the moment. So that's significant news, because it basically means that South America is going to business in South America will be looking at a multiple of 3x growth. very significant.
When you first started off 20 plus years ago, you were strictly focused on West Africa. Last year, you had to, because of geopolitical risk, you had to move out of some countries, and you've more focused on Ghana and the Ivory Coast. You still were working in Mali. There's some news coming out of Mali, sort of some risk coming out of there. Are you still in Mali, or what other areas in West Africa are you operating in?
So you recall when we mentioned that we were exiting Burkina Faso, we said we had one other country that we're not quite done with our repositioning, and we still had one country left to exit, and Mali was that country. We don't like to not mention countries jurisdictions by name, particularly when you're there. But we're now completely out of Mali. Have been out of Mali for a few weeks now. Yeah.
All right. So in West Africa, it's just Ghana and the Ivory Coast you're operating in?
So we're very okay with Ghana. We're very okay with Ivory Coast. Very, very good jurisdictions. We recently expanded into Senegal.
Okay.
We're having that's a great place. It's a good jurisdiction, solid. Not as mature as Ivory Coast or Ghana, but we're enjoying the experience. It's looking, it's off to a good start. Of course, Egypt is a country that we continue to expand into, and we're currently looking at other parts of MENA. The Middle East, Saudi is looking interesting, I think, and so we could end up doing something in the not too distant future in Saudi Arabia.
Okay.
Sorry, the Kingdom of Saudi Arabia, KSA. But really, the main attention at the moment is going to be in South America. In South America, in Chile in particular. We started with one junior exploration company that made a discovery because we drilled a particular project that other drilling contractors had problems getting to get the holes completed. We managed to do those holes, and that came as great news for that particular company because they made a discovery, and then the project next door just happened to be a tier one in the form of Antofagasta mining, which is biggest copper miner in Chile. So they were very interested in what we were doing. So literally just managed to secure a nice long-term contract with them. And another company, Capstone, we've just secured to work with Capstone for the next 2 or 3 years. So all good. Everything's coming up. Everything's coming up South America at the moment for us, actually.
One of the legitimate concerns when the firm was younger is just the geopolitical risk of being all in West Africa, which has a tendency to being a little volatile, as we've seen. And now you've really expanded your footprint to North Africa and South America with the expected huge growth in the copper market. I would think that's a great place to be right now.
Yeah, I would say that of the West African countries, we are working in the best and the safest jurisdictions in West Africa, the places where you really want to be. And there's a huge demand for our services there. And these countries rate very, very highly on the Fraser Index, which is the index that you look at in terms of in terms of investability. But look, we're just really enjoying the experience of diversification into South America. South America for us is not a gold play. We don't drill for any gold in South America. I don't doubt that it's there, but for us, it was more about we're drilling for plenty of gold related projects in Egypt and West Africa. So we really wanted to just get that commodity diversification, and South America offered that in the form of large programs for tier one miners. And we did our penance working for juniors and established ourselves, developed a reputation, and so it follows that now we're being picked up by the tier ones, and that's where you want to be. Yeah.
And in Egypt, I believe you announced a new client there. So you've got maybe 3 clients there, and sort of that's an expanding base of business there as well.
So we're currently working for about 6 names in Egypt.
Oh, okay.
And we started with just a couple of drills. And again, you know, we started working for a small company. We did our penance, and before too long, we found ourselves on the tender list of the preeminent mine in Egypt, which is the Sakari gold mine. Now, this mine was previously owned. Oh, when I say previously, it just changed hands in the last couple of days. It was previously owned by Centamin Mining, very significant London-listed mining company with a lot of history. That company was just acquired by Anglo Gold Ashanti, a tier one gold miner. Now, Anglo Gold Ashanti, as it turns out, happens to be a customer of ours in another jurisdiction. And so it's yeah, it's all good. Yeah, it's all good. Egypt's good.
One of the issues with also in West Africa, I believe it's Q4, you often get hit with the seasonality of a fair amount of rain in the wet season. I'm pretty sure there's no big wet season in Egypt, and I don't think as well in South America. Does that mean Q4 is going to be a little less sort of volatile, or it sounds like Q4 is just going to be a good quarter this year, given the repositioning in South America and the new contracts?
It's going to work well, but the swathe of new contracts that we've just signed in South America are only just getting started, and we're halfway through the four. So I would say Q4 is going to be okay.
All right.
It's not going to be a bang it out of the park, but it'll be a year-over-year improvement, and it'll be a profitable quarter. So I think the real noise is going to start next year from Q1. So this year, comparing it to last year, will be a good year. It'll be a good year. It'll be a significant improvement over last year. Then looking forward, 2025 is looking good. It's looking solid. 2026 and 2027 all looking solid, because we've got contracts. You know, we've got a handful of contracts, and we know that they, you know, so we can see we have visibility for the next 3 to 5 years. So it's pretty significant. Yeah, it's all, yeah, as I say, everything's good, and gold's back to 2,700. I know it took a bit of a dip post US elections. Shiny things like Bitcoins and so on and so forth are having a bit of a day in the sun at the moment. But I would say, you know, the drill Bitcoin is yet to be, you know, it's probably the most overlooked investment out there.
Well, even if which it did dip a little bit, it's well over $2,000, which the miners were praying for years and years and years. So we're there. So if you're not making good money at these prices,
Actually,
you've got some.
$2,700 as of today. It's just above
Yeah.
that. And most of the West African producers are producing at just north of $1,000 an ounce. So they're printing cash. They're printing cash. There are some high cost producers, but even they're profitable at these prices. Yeah, and there's no talk that gold's coming down anytime soon. You know, with all the geopolitical stuff that's going on in the world, and BRICS. You know, just go to Google and type in BRICS. Or everyone is trying. All the nations are out there trying to compete with the US dollar, and they're not going to do that unless they increase their gold reserves. So, a lot of central bank purchasing going on at the moment, and yeah, it's just a lot of good stuff going down. It's busy. It's palpable. You can feel it. We're back to some of the best times we've ever seen in this industry. You know, equities are still yet to catch up, but you know, remember, the driller's the canary in the coal mine. So when the drillers are busy, it's game on.
You announced in the quarter that you've got 95 rigs. 2 parts I want to ask regarding that. I'm guessing or thinking you'll probably maybe break 100 next year, which would be a good milestone. And as well, can you say how your rigs are sort of geographically split now? How many are roughly in West Africa, North Africa, and South America?
I haven't got the numbers exactly in front of me, but I would say it's 60% West Africa, probably 15% in Egypt, and 15% in South America. Yeah. Off the top of my head. I haven't got the number immediately in front of me. I was just at a meeting, and I should know that. I'm sorry.
Yeah, but obviously, okay, it's
moving.
diversifying nicely.
It's such a moving thing at the moment, though.
Yeah.
And we've just got so many new projects going on at the moment. It's like the start of the great race out there, I tell you. It's really busy.
Yeah. This isn't quite so much a question, but I just feel I need to comment on this. You announced as well 21 million lost time incident-free hours that your company has put out. And besides that, to take care of your workers, to me, and I've come from an operating background before getting into this industry, it means you're organized, you're operating well, you're not just running around, you're training people properly. And to me, that's a huge indicator of like a well-run organization. And it's great for your employees. And just congratulations. And I think investors should have a look at that number and be impressed by it.
Thank you. On investor calls, we don't nearly talk enough about health and safety, and it's a huge milestone, and thank you very much. We put an enormous amount of effort into providing a safe working environment for our employees. It's something that's very close to our heart. All organizations should provide a safe working environment for all employees, and it's a never-ending situation. It's evolving all the time with rig robotics and training and procedures and things. There's no finish line when it comes to safety. It's a constant work, work in progress. Yeah.
Yeah. Earlier this week, you put out a news release with some of your accounts receivable and swapping it for equity in one of your, I guess, former customers. Could you just sort of highlight that very briefly, what happened there, and just give some insight into that?
Yeah. So let's look at 2023. Two things happened. One, we decided to move out of Burkina Faso, and therefore revenues dipped slightly. That's not what this is about. What you read about on Tuesday, I think it was the dip that we took in the provisions that we took for some customers, a handful of customers that owed us, and the aging debtors got the wrong side of 180 days, to the extent where auditors stepped in and said, hey, you're going to have to take a provision on this stuff. So we took one-time provisions in quarter 3 and quarter 4 of 2023. Now, this smashed our EBITDA. It literally halved our EBITDA for the year. This is a cyclical business, and when gold is 27 plus $100 an ounce, our customers that are beholden to the capital markets are able to raise capital, and so they have, and so this has been those outstanding debts have been returned to us, and will end up back on our balance sheet. And we'll end up basically those debts have now been settled, and that's what that was about, yeah.
All right, but you still need to sell the equity to monetize it, and I guess there'd be some market risk associated with that.
There is some market risk there, of course.
Yeah.
On the flip side of that, the stocks could also go up.
Yeah.
But it was that or not get paid. I
Yeah.
mean, it was a no-brainer. I mean, these amounts have actually been pretty much provided for.
Yeah.
So taken from our, effectively provided for and more or less written off. And so if they've come back, then it comes back as a bump. Insofar as the stock, there's a hold, a 4-month hold on the stock. But these are, when one particular case, this is a cash producing large mine. I mean, I would be happy to be a shareholder and sell at a time in the future when it suits us. So I think that the upside is far greater than the downside. What we were going to do, what we were going to say no, or it was a total no-brainer to take the stock and put the bad debt behind us and return that value to the balance sheet for our shareholders. Yeah. So effectively, it was Now,
And it's not just one company. There were a few companies.
handful of companies, handful of
Okay.
companies. I mean, a basket of companies. I mean, if you look at the entire problems that we had during 2023, it was all to do with market cyclicality. And, the markets were risk off for mining stories. That has changed, and the markets are open again, and money's starting to flow back into equities. And so I was always confident, but, the auditors took their position, and it's just beyond our control.
I think we covered the main points on the quarter and a business update. Anything else you want to update investors on before we wrap it up?
I think that was it. It's going to be a solid year. I think we have a lot to look forward to. We are armed with contracts that are going to continue for the next. Well, we've got visibility now for the next 3 to 5 years. We're not going to be guessing where our revenues are coming from. Our demographic has completely changed to a stronger type of customer that we're going to spend less time, less problematic in terms of getting paid. We've moved from difficult jurisdictions into better jurisdictions. We've got a better split now between gold and base metals and EV metals. We're growing our business model in South America. We've done our penance, and now evidence of that is we've secured multi-year, multi-rig contracts with tier one miners. So we're relevant. We're very, very relevant in the mining industry today. Still very undervalued, but every CEO sitting in front of you would tell you that. But we still trade at a discount to book. We still trade at less than 1x revenue, and we're still trading at 2.8 times EV EBITDA on a 2020 on a go forward 2025. So, I mean, I just don't know where you find that sort of value out there in the market today. So, the drill Bitcoin, Geodrill, GEO.T.
All right, Dave. Well, with that, thank you very much for the update. Always fun talking to you. Talk to you again soon. All the best for the rest of the year.
Thanks, Ed. Thanks. Cheers. Bye.